Hello, welcome to Geojit Spotlight. When market valuations are high, the market needs only a trigger to correct sharply. Valuations in US, which has been by far the best performing market this year, had reached high levels with S&P 500 trading at 28 times trailing earnings. At such high valuations, unexpected news will trigger corrections. This was what happened yesterday in the US markets. 25 basis point rate cut from the Fed was what the market was expecting and had priced in. The Fed delivered the rate cut in tune with expectations. But what was not expected was the Fed commentary, which indicated only 2 rate cuts in 2025 against the market expectation of 3 or even 4 cuts of 25 basis points each. Actually, the Fed's commentary is by and large positive. It indicates a resilient US economy and a strong labor market. But the Fed chief Jerome Powell's comment that at this stage, caution is needed in cutting rates further led to a sell-off in the market, which was priced to perfection. The sharp spike in the dollar index to above 108 and the US 10-year bond yield rising to 4.52% are negatives from the FII fund flows perspective. However, this is likely to be a temporary phenomenon. President-elect Trump does not like a strong dollar, which will negatively impact US exports. Therefore, his policies will ensure that a dollar weakens. In India, market sentiments had turned weak following the poor Q2 GDP numbers and poor Q2 earnings numbers. This trend is likely to be reversed in Q3 and Q4. The decline in government capex, government capital expenditure, in Q2 has picked up starting August, and this will be reflected in Q3 and Q4 numbers. Long-term investors have an opportunity in the present sell-off. Investors may keep in mind the following factors. 1. Large caps are reasonably valued, but large caps are underperforming due to FII selling. 2. The broader market, the mid and small caps, are highly valued, but the high valuations are sustaining because there is no FII selling pressure in this segment, because there is negligible FII holding in this segment. Also, continuous fund flows from DIIs and retail buying are sustaining the valuations in the broader market at higher levels. 3, and this is important, in 2025, at some point, we will have positive news about the economy. Then FIIs will turn buyers and the main beneficiaries will be the large caps. 4. For investors with a medium to long-term perspective, this is a good time to accumulate large caps, particularly large caps in performing sectors like banking, where valuations are attractive and the down risk is very low. Growth sectors like the digital space, the digital platform companies like the food delivery companies, quick commerce companies, payment companies, they will continue to report good numbers in the coming quarters. This segment will bounce back soon.